This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at @BackupBradleyAbove at the top of the screen, and everything that we're talking about here today. Remember, there's many layers that you can use for your protection online. Anonymity is one. I use Pure VPN, introducing a 7-day trial for 99 cents, guys. It is one of the layers of security I use to protect my anonymity online, as well as other things. There's a link in the description for that and many other things below that may be what you're looking for. So make sure you check all of those out. All right, so let's get into this thing, because today we're going to start with none other than Hodor. Yeah, I tell you, if there's somebody that I really missed that's been out of this space for a while, it's Hodor and his writings and his insight. I hope him and his family are doing well during these strange days. I want to talk about Ripple, XRP, and XRP really having monetary policy enacted on it. And by that, I mean that when you're introducing a currency to the world, in order for it to be money or currency throughout the world, everyone has to agree that it's money, because it's not money unless everyone agrees that it's money. We look here at a post from, I think it was 2017 or so, from Hodor, and this comment is what I want to get to here, and is November 13th, 2017. And I tell you, Hodor's writings were just really amazing. So let's just take a look at this comment here. Brad Garlinghouse recently wrote about Ripple's caution towards XRP holdings, and this was right at the time when they created an escrow for XRP and began the lockup period in a cryptographically auto-locked escrow account. And obviously with a time release, and then a certain amount is released each month, they determine how much gets sold, and then it goes into a new escrow rollover into the back end of the current escrow agreement. So, and you guys know that I've believed for a long time that there's been at least a portion of the escrow that has been pre-allocated in order to incentivize the entire world and the largest part of the network, to get them incentivized to use XRP to a great extent because of the utility they will bring to it, and liquidity in some instances as well. So let's look at this comment. To build XRP liquidity, we have been mindful over the years about how we distribute XRP. Our goal in distributing XRP is to incentivize actions that build trust, utility, and liquidity. We engage in distribution strategies that we expect will result in a strengthening of XRP exchange rate against other currencies. We have a proven track record of doing just that. That sounds like a great definition of contractually obligated pre-allocation circumstances right there. So let's look at some other things here. And this is more about monetary policy for XRP today. I just want to highlight that. Here we go. Now, this is a document I showed in an earlier video from yesterday, but I want to show you this because this is from 2018 from Ripple, and this just shows back in 2018, around the same time frame, 2017 going into 2018, some of the partners and customers that they were working with on the development and the use and incentivizing the network and the use of XRP. And we see JP Morgan, Citibank, Merrill Lynch, BlackRock, Visa, Pfizer, PayPal, Prosper, and then the technology side, Google, Apple, Yahoo, Bloomberg, NASA. Regulatory side, Federal Reserve, SEC, DTC, NSA. You guys know that I've been not shy about the fact that I believe the OCC and the Treasury Department here in the U.S. will absolutely deem XRP a currency. We're going to look at that aspect in a second too. What I want to go to now is is this is a clip that I have from my channel from some time ago, where we had a congressional hearing where the gentleman, Mr. Ahmed from PayPal, saying in a congressional hearing that they could use XRP for small value payments. Listen to this quick comment.
Comment on that.
I would just note that, for the kind of core banking architecture, I think there would probably be some changes needed in terms of the Federal Reserve System. But for, smaller valuation or smaller amount payments, I think you already are seeing some blockchain-based systems being created that enable the movement of money. So I think there are examples out there. We talked about XRP or others that kind of offer this.
XRP, there it is in a congressional hearing from Mr. Ahmed from PayPal. Now, that's interesting to me because I believe that XRP will ultimately have monetary policy, be a currency, or at least a hybrid, but regulated as a currency ultimately in my mind. And I think this is as fine an example of it as anything, because PayPal can use it. And if PayPal is going to use it and it's a commodity, that means that they would be settling small value payments and then have to pay cap gains on that asset. It doesn't work in my mind in that way, in that regard. Okay, let's keep this going. Then we saw in the beginning of the year, January 2020, moving up in a time frame, the World Economic Forum recommending in the CBDC, Central Bank Digital Currency Policymaker Toolkit, in the PDF that is JPM Coin and XRP, cited as settlement options for crypto assets designed for inter and intra-bank payment and settlements. So this just isn't somebody on YouTube and podcasts talking about these things. This is happening on the highest levels of implementation and discussions here. Then we had in July, just a few months ago, or last month, we had Brian Brooks come out and agree that federally chartered banks could now provide custody services for crypto assets. Remarkable moment. And I really do believe that Cryptopolis said it best. This needs to be a national cryptocurrency day, the day that this happened. It really, really does. And then moving forward through the information, not long after that, we had the public opinion in comment written from Dr. Douglas Jackson, who was early on in the days of building a gold platform, who wrote remarks about, Bitcoin and other technologies, and specifically XRP as well. And he wrote here in his paper to the Office of Comptroller of Currency. This is what he had to say. In contrast, XRP, and it was in contrast to Bitcoin and how Bitcoin was not a solution. So in contrast, the native currency of Ripple is effectively a fiat currency. At its inception, Ripple Labs created 100 billion units, XRP 20 million of which were retained by the creators, who were also the founders of Ripple Labs. The creators gave the remaining 80% to the total of to Ripple Labs, with XRP intended to fund operations. The monetary policy of Ripple Labs has been stated as, we will engage in distribution strategies that we expect will result in the stable or strengthening XRP exchange rate against other currencies. In other words, only the forbearance of people sitting on this vast pool of play money prevents release that would kill the golden goose. In other words, only people sitting on it and never using it could they kill the golden goose. Unlike government-issued fiat money, no entity has the ability or responsibility to buy in XRP in sufficient quantity to quell a full-on panic situation. The best that can be done is to slow or halt further release of additional money. What he is describing there is monetary policy of a deflationary asset that has already been created and no more will be created. This goes back very similar to the remarks that we started off with here. To build XRP liquidity, they have to be mindful over the years about how we distribute XRP. Our goal in distributing XRP is to incentivize actions that build trust, utility, and liquidity. We engage in distribution strategies that we expect will result in strengthening XRP exchange rate against other currencies. It's exactly what we looked at right here in the comment remarks that went to the OCC and Brian Brooks. This, to me, really seals the deal when you add in that CFTC former chairman Chris Giancarlo now is also senior counsel at Wilkie Farr, Gallagher, and Balke. Both work on the behalf of Ripple, a client from the same law firm, and he agrees as well and wrote an amazing paper, professional opinion, on the fact that not only is XRP not a security, but it is a medium of exchange or a currency, period. And it does not conflict with it does not fall in line with the Howey test as a security. So then we have this that I put out yesterday's video from Deloitte back in 2015, I believe, 2012, 2015 area, somewhere in there. And I'm going to go through just part of this, starting down here, and go through this rest of this section again, because I want to highlight it against the idea that we're talking about now, that XRP is not just a digital asset, but a currency. And what we see with the escrow, what we see with the contractual obligations or pre-allocation to incentivize industries and networks, is really about incentivizing the use of new money, because it ain't money unless everybody agrees that it's money. If a global reserve currency is to be stateless, which means not controlled, it is also needs to be independent. This means it would need to be supported by enforceable taxation rights across participating countries, or valued against a single commodity, gold, for example, or a basket of commodities such as gold, oil, grain, etc., owned by an issuing entity. A third option, enabled by our increasingly globalized and virtual world, is to adopt a stateless cryptocurrency. The trust dynamics that limit the adoption of cryptocurrencies within a closed community also limit adoption across communities. Money is a technology for resolving obligations between individuals who don't know or don't trust each other, for whom barter is too awkward. The strongest possible driver for national adoption of a cryptocurrency is for the national government to mandate the taxes be paid in the cryptocurrency. Similarly, the strongest possible driver for global adoption of a global reserve cryptocurrency would be a global institutions that can force their will on most cross-border trade, mandating its use. That's exactly what Ripple has been doing for all of these years, working with the right entities around the world that have the right level of liquidity and utility that can actually force the mandate and the use for cross-border payments, widely speaking here. And anyone else has to fall in line. Otherwise, stateless cryptocurrencies will continue to play a niche role in the global economy, just as they do in the national economies. Individuals and institutions will still find it more convenient to conduct their business in one of the currencies at either end of the transaction, which, as we've already stated, is most likely to be a national fiat currency. So exactly the way XRP was designed, to sit in the middle of all the world's money. What is the motto, one of the mottos of Ripple? Oh, that's right. All the money, right? In a trusted third currency, which by sheer size may be the global reserve currency, or in a weighted basket of currencies as a risk management strategy to limit exposure to any single currency. International intercurrency exchanges may travel over peer-to-peer technology platforms based on or inspired by the technologies that underpin cryptocurrency such as Bitcoin or XRP, but value will continue to be stored and exchanged in conventional sovereign currencies. I have to tell you, that is remarkable. Let's keep this going. Then we saw this from 3 days ago. I'm not going to play it again, but this is basically the UN endorsing digitization and saying it is a force for good. Last week we had, or the week before last, we had the IMF webinar with Barry Eichengreen, who was recently on the Blockstars podcast with David Schwartz. In the IMF webinar, they were discussing dominant currencies and an external adjustment to the exchange rate peg. How can we handle the dollar because it's too dominant, and how can we readjust the exchange rate for that and not harm the rest of the world because of it? That was the discussion. And Barry Eichengreen talked about the Triffin dilemma of the global reserve currency status of the U.S. dollar and how something had to be done. Watch that video, type it up, the IMF, in my search list. You'll see it. Let's keep this moving because the discussion is really pretty massive. So when it comes to XRP being currency and monetary policy, listen to this. Shout out to Miguel Villas from 2017. We've covered this before, but this is very pertinent when it comes to the earlier statements from Deloitte and the early statements in 2017 from Brad Garlinghouse and others. So let's listen here.
Hopefully we'll all look back someday and be like, wow, I can't believe I was a part of that. So yeah, I'm obviously pretty stoked.
Like, how do you intend to distribute the rest of the XRP then?
Yeah, no, that's a good question, Mahir. And I don't necessarily know that we'll ever distribute all of it. In my mind's eye, there's a possibility where, we end up more of a lending kind of, more of a lender of last resort capacity, maybe. I think
it's interesting because, Ripple themselves hold a little over 6 billion XRP. And he talks about in that comment there, I don't know that we'll ever get rid of all of it. Yeah, because it would be poor monetary policy if you did. You want to hold a portion of that back to be able to exercise monetary policy going down the road 100 years from now. Remember, Arthur Brito in the early days said that it was supposed to be to be able to scale to 7.5 billion people. And, I think it was 150 years or something like that. So that's the notion, is that this asset, this new money, be able to serve the world for a very long time. Let's keep listening.
I think that would be a little strange for a software company, and maybe some things would have to change structurally. Maybe we have to have a different organization or something. Who knows, right?
A different organization. Now, this is interesting because if you go to this comment here from Mark Carney that we've covered many times here on the show, he talks about the idea of a synthetic hegemonic currency replacing the dollar as the global reserve currency. And he also says that major actors in this new world of digital money will be sovereign issuers, while the introduction of a synthetic hegemonic currency, an SHC, might require the prior establishment of a world government. Isn't that what he just said? Isn't that what Miguel Villas just hinted to? Let's keep listening.
But as these capital markets develop, as liquidity develops, there are going to be folks who, if they want to provide liquidity in the asset, don't want to necessarily own the asset because that puts them in harm's way for price movements. So if you can borrow the asset and create liquidity that way, it's actually a much more efficient way to be part of the liquidity mechanism. It's how traditional capital markets work. I mean, my first job on a trading desk was managing the repo book, the overnight Tom Next kind of liquidity provision that every day we had to roll. There's nothing like that in digital assets. So partly because the transfers happen instantaneously, but also partly because it just hasn't developed. And one of my longer term goals, after I get the ecosystem built out, after I get payments running through there, as I start to merge or try to merge the two worlds, the digital asset markets and the traditional capital markets, as I try to do that, I think one of the levers that we'll be able to pull will be lending. And as a result, I don't necessarily know that we'll need some XRP, right, in order to do that. So I guess a long-winded way of saying, I'm not sure we'll ever get rid of all of it and sort of let it all out into the wild, partly because there is some utility for us or maybe some other, organization having it to make sure that the markets are always liquid.
And there it is right there. And when I go from that and then come back to the Deloitte statement, which is just so profound to me. Let me get that back up here just so we can see that again. I want to get that remarks right here. When I come back to that and I really come back to the idea that the strongest possible driver for driving global adoption of a global reserve cryptocurrency would be global institutions that can force their will on most cross-border trade, mandating its use. That, to me, really requires that if you're going to do that, then you are going to need to establish with those large entities that can force their will to create some kind of new prior establishment of a world government, whether it's already the G20 or the G7 or some other entity that stems off of that, to give you the ability to control what would be a stateless asset that could absolutely help drive the new economy that really needs to pull all of us out of the hole that they've got us in. All right, guys, that's going to do it for me. XRP, monetary policy. It looks like it's here, and it's getting more clear every single day that we get closer to them absolutely having to make a statement to tell us once and for all, what is the designation of XRP? Is it a currency? Because it's certainly not a security. All right, guys, that's going to do it for me. Hit the like and subscribe. Leave a comment below. I'll catch all of you on the next one.